Hello candidates, and welcome back to the lesson. The subject is Advanced Auditing and Assurance. The topic is Audit, Evaluation and Reviews. We're continuing with the chapter. Today we are going to the next sub-chapter, which is Related Parties. Related Parties. Related Parties. In studying related parties, we're going to look at the risks associated with related parties. We consider the process of identifying related parties by management, the disclosure of related parties in the management letter, and also the disclosure of related parties in the financial statements. That's what we are expected to study in our today's lesson. And candidates' related parties include individuals or entities that are connected to a company through ownership, through control, and other forms of influence. And there are some common risks that are associated with related parties. That's what we are going to study first. What are some of the common risks that are associated with related parties? Now, one is lack of arm's length transactions. Lack of arm's length transactions. Now, related party transactions may not be conducted on a normal commercial terms, which may lead to risks of over or under representation, or under or over valuation of assets or liabilities, and that can result in inaccurate financial reporting and misrepresentation of the entity's financial position and performance. So one of the risks associated with related parties is lack of arm's length transactions. It's expected that when related parties are dealing with a company, then there ought to be what we call arm's length transactions. All right. So related parties, we know, may not the transactions may not be conducted in the normal commercial terms because of the influence that the related parties have in an organization, or because of ownership and so on. So lack of arm's length transaction is a risk that is associated with the related parties. Number one. Number two is concealment of information. When a company deals with related parties, then there is the risk that information will not be revealed. Certain information may not be revealed. Concealment of information. Related parties may collude to conceal or manipulate information in financial statements, leading to misrepresentation or fraudulent reporting. And that can particularly be risky if the related parties have vested interests in presenting a favorable financial position or hiding certain transactions or liabilities. So that's a risk. Concealment of information. 3, conflict of interest. Conflict of interest. Conflict of interest. Related party transactions may involve conflict of interest, where the interests of the related parties diverge from the best interests of the company. And that can result in biased decision making and transactions that may not be in the entity's best interests. 4, inadequate disclosures. Inadequate disclosures. Inadequate disclosure. Now, failure to disclose related party transactions and relationships, or insufficient disclosure or inadequate disclosure can hinder users of financial statements from fully understanding the nature and potential impact of such relationships and transactions. So candidates, incomplete or misleading disclosure can undermine the transparency and reliability of the financial statements. So that's another risk that is associated with related parties: inadequate disclosures. We can also cite impairment or impaired objectivity. All right? Impaired objectivity. And this impairment is in relation to management. The impairment or the impaired objectivity of management and auditors. Impaired objectivity of management and auditors. Impaired objectivity of management and auditors is another risk that is associated with related parties. Related party transactions can candidates compromise the objectivity and the independence of management and auditors. How or why? Because management may be influenced by personal interests or pressure from related parties, leading to biased decision making and inadequate oversight. Similarly, auditors may face challenges in maintaining independence and objectivity when dealing with related parties, transactions, and relationships. So that's another risk associated with related parties: impaired objectivity of management and auditors. Now we'll move on to discuss briefly ways in which these risks may be addressed. How should an auditor address these risks? How can these risks be mitigated or be addressed? Now, candidates, to address these risks, entities and auditors need to implement effective controls and procedures. Effective controls and procedures. Controls and procedures to address these risks. There are certain controls and procedures that must be implemented by the auditors and the management in order to address the risks that are associated with the related parties. And such controls may include identifying and assessing related party transactions and relationships, because there is no way that the company can address these risks without first of all identifying and assessing the related party transactions. Identify and assess related party relationships and transactions. There should be controls and procedures to identify and assess related party relationships and transactions. Number 2, establishing establishing and also enforcing. Establishing and enforcing policies and procedures. So first of all, there should be controls and procedures to identify and assess related party transactions and relationships. Then there should be also controls and procedures for establishing and enforcing policies and procedures. Establishing and enforcing. Establishing and doing what? And enforcing policies and procedures for related party transactions, and also including approvals, including things like enforcing policies, approvals, and also the disclosure requirements. There ought to be establishment and enforcement of policies and procedures. The third point is enforcing or ensuring that related party transactions are conducted on arm's length. Related party transactions should be conducted on arm's length, conducted on arm's length terms, conducted on arm's length terms, and are supported by appropriate documentation. When the company enters into transactions with a related party, then such a transaction should be conducted at arm's length, and there ought to be proper, adequate documentation of such transactions. Another point is implementing strong corporate governance practices. Strong corporate governance practices in order to mitigate against the risks that are associated with related parties. Then the company should implement strong corporate governance practices. Strong corporate governance practices to mitigate conflicts of interest and promote transparency. Another point is disclosing related party transactions. Disclosing related party transactions and relationships in the financial statements in accordance with the applicable accounting and regulatory requirements. Disclosing. The standards on accounting require that related party transactions and relationships be disclosed in the financial statements. So disclosure of such relationships and transactions is another way of controlling or mitigating against the risks that are associated with the related parties. Conducting thorough assessments and audit procedures. Conducting thorough assessments and audit procedures is another way to mitigate against risks associated with related parties. Conducting what? Thorough assessment and audit. The auditor should conduct thorough assessment and audit procedures to evaluate the appropriateness of related party transactions and the reliability of related party disclosures. So these are ways or controls and procedures to address these risks. And candidates, by addressing related party risks, entities can enhance the integrity and credibility of financial statements and provide users with a more accurate and transparent view of their financial position and performance. Do you understand? Now, let's move on with another part of this lesson, is the process of identifying related parties by management. Process of identifying related party. Let me have it here. Process of identifying related parties by management. Now, the process of identifying related parties is typically the responsibility of management, and it involves a systematic approach to identify and disclose relationships with the related parties and transactions with such parties. And the process begins by 1. Establishing policies and procedures. Establish policies and procedures. Management should establish policies and procedures that define related parties and also provide guidance on the identification and disclosure of related party relationships and transactions. And this policy should align with the applicable accounting standards and regulatory requirements. So number 1, establish policies and procedures that define related parties and transactions. Register. Maintain a related party register. The management should maintain a centralized register or database to record and track related party relationships. And the register should capture relevant information such as the name of the related party, the nature of the relationship, and any transactions or financial interests involving the related parties. So the management should maintain a related party register. Then there has to be regular communication. Regular communication. The management should maintain or should communicate. Let me say the management should communicate with the personnel across different departments and levels within the organization in order to gather information about potential related parties. And this may involve discussions with the executives, discussions with the finance personnel, discussions with the procurement teams, and discussions with the legal counsel, among others. There ought to be regular communication. When there is regular communication with the parties I've mentioned, then the management can identify related parties. Review corporate structure and ownership. Reviewing of corporate structure and ownership. The management should review the entity's corporate structure, ownership, and governance in order to identify any related party relationships. And that includes assessing the relationships with subsidiaries, assessing relationships with the affiliates, assessing relationships with the joint ventures, and any significant shareholders, including key management personnel. Reviewing the corporate structure and ownership is another way of identifying related parties by the management. Another point is review of financial statements. Review of financial statements and disclosures. By reviewing financial statements and disclosures, the management can identify related parties. The management should carefully review the financial statements, including the footnotes and related disclosures, in order to identify any indications of related party transactions. And that includes examining information relating to sales, information relating to purchases, information relating to loans, information relating to guarantees, information relating to leases, as well as compensation arrangements, and any other financial arrangements involving related parties. Review of financial statements can help the management to identify related parties. Documentation and disclosure. Documentation and disclosure. The management should document the identified related party relationships and transactions in a clear and organized manner, and the information should be appropriately disclosed in the financial statements, in the footnotes, and other required reports as per the applicable accounting standards and regulatory requirements. So these are 4 points that can help to identify related parties by the management. I've said it is the role of the management to identify related parties and not the role of the auditor. So now we've done that bit. We now move on to disclosure of related parties in the management representation letter. Disclosure, let me have it right over here. Another subtopic is disclosure of related parties. Disclosure of related parties by management in the management letter. Now, candidates, in the management representation letter, the disclosure of related parties typically includes a representation by management regarding the identification and the disclosure of related party relationships and transactions in the financial statements. And the specific language used may vary depending on the jurisdiction and the applicable accounting standards. But here we are going to discuss generally the management representation letter, which may include several aspects. The disclosure of related parties by management in the management letter may include the identification of related parties. Number one, identification of related parties. Identification of related parties. Now, the management represents that it has identified all related parties as defined by the applicable accounting standards, including individuals, entities, and other parties that have close relationships with the organization or the entity's key management personnel. So that is one aspect you'll find in the management representation letter. The management represents that it has identified all related parties. Do you understand? Because candidates, there are applicable accounting standards that regulate, that give guidance on the issues related to related parties. So within the management letter, the management represents that it has identified all related parties. All right? Which include, these related parties includes individuals, includes entities, and other parties that have a close relationship with the entity. Or these parties have a close relationship with the key management personnel of the entity. So that is one aspect you'll find in the management letter, the disclosure of related parties by management in the management letter. Do you understand? The second aspect will be disclosure of related party relationships. Disclosure of related party relationships. Now here, the management represents that it has disclosed all material related party relationships in accordance with the applicable accounting standards, and that includes providing information about the nature of related party relationships, the names of the related parties, and any other significant transactions or arrangements with related parties. So here it is the identification of related parties. The management lists all the related parties. Then in the second point, the management discloses the relationship. Okay, disclosure of related party relationships. It represents that all material related party relationships in accordance with applicable accounting standards. Do you understand? Which may include information about the nature of transactions or any other arrangements the company has with the related parties. Number 3, consistency. Number 3 is the consistency with accounting policies. Consistency with accounting policies. The management here represents that the accounting treatment and disclosure of related party transactions are consistent with the entity's accounting policies and the applicable accounting standards. And this ensures that related party relationships are recorded and presented in the financial statements in accordance with the appropriate recognition, measurement, and disclosure requirements. Consistency with accounting policies. Number 4, completeness and accuracy of disclosures. Now the management under this point represents that the related party disclosures in the financial statements are complete and also accurate, providing a true and fair view or picture of the entity's related party relationships and transactions. And that includes ensuring that all material related party transactions have been properly accounted for and disclosed. So the management must not only represent the completeness of related party transactions, but also the accuracy of related party transactions. And there ought to be a true and fair view of the entity's related party relationships and transactions, which I've said must ensure that all material related party transactions have been properly accounted for and disclosed. Completeness and accuracy of disclosures. Compliance with laws and regulations. Compliance with laws and regulations. Compliance with laws and regulations. The management represents that the entities related party transactions and disclosures comply with the relevant laws, regulations, and any contractual obligations. And this includes adhering to any specific disclosure requirements related to related parties imposed by regulatory authorities or industry-specific regulations. You understand? So that is disclosure of related party parties by management in the management letter. When doing the management letter, then all these has to be represented. Number one, identification of related parties. Number two, disclosure of related party relationships. Number three, consistency with accounting policies. Number four, completeness and accuracy of disclosures. Then lastly, compliance with the laws and regulations. And candidates, the management letter, the management representation letter serves as a formal written communication from the management to the auditors, providing representations on various matters related to financial statements. And by including the related party disclosures, in the management representation letter, the management confirms that disclosures. It confirms that that its responsibility for identifying, for disclosing, and appropriately accounting for related party relationships and transactions in the financial statements. And that helps provide assurance to the auditors regarding the accuracy and completeness of related party disclosures in the financial statements. Do you understand? That's the purpose of the management representation letter as far as related party disclosures is concerned. The manager, I repeat, the management is required to disclose related party transactions in a management letter that is addressed to the auditors. And I've said that by including the related party disclosures in the management representation letter, management confirms its responsibility for identifying transactions, for identifying relationships as far as related party transactions and relationships are concerned. And that helps to provide assurance to the auditors regarding the accuracy, regarding the completeness of the related party transactions and relationships in the financial statements. So that is disclosures of related parties by management in the management representation letter. We are also required to, from the syllabus, to also study the disclosure of related parties in the management letter and also in the financial statements. Disclosure of related parties in the financial statements. Disclosure of related parties in the financial statements. Now, candidates, apart from disclosing related parties by management in the management representation letter, there ought to also be disclosure of related parties in the financial statements. And the disclosure of related parties in the financial statements is a requirement under accounting standards. In order to provide, this helps to provide transparency and ensure that users of financial statements have information about the entity's relationships with related parties that could influence its financial position and performance. So here we are going to discuss some of the information that ought to be included in the financial statements as far as related parties are concerned. The first one is nature of relationships. The first information is in relation to nature of relationships. Now, when disclosing information in regard to related parties in the financial statement, part of the information should include the nature of relationships. The nature of relationships. The financial statements disclose the nature of the relationships between the entity and related parties. Part of the information in the financial statements in relation to related parties should include the nature of relationships. Why? Because that include relationships with the individuals. That information includes relationship with the individuals, or relationship with the other entities, or relationships with the key management personnel, which may have significant influence on the decisions of the organization. So there ought to be information regarding the nature of the related party relationships. Then there is the description of transactions. Description of transactions. The first point is in relation to relationships. Then there is transactions. This relationship could be say another entity. It could be a key personnel manager or whatever, but there also ought to be description of transactions. Once related parties have been identified, then there ought to be information on the description of the transactions that the related parties have with the entity. Candidates, the financial statements provide a description of significant transactions with the related parties. And that includes details of the nature, the terms and conditions of transactions, such as the type of goods or services exchanged, the amount of the transactions, and any outstanding balances. All right? Transactions. If it is a sale of goods, what are the terms? If it's services that are provided, what are the terms? What is the amount? What is the nature of the goods? What goods were exchanged? Is there any outstanding balances between the related party and the entity? So that has to be described in the financial statements. Amounts outstanding. Amounts outstanding is part of the information required when disclosing related parties in the financial statements. If there are any outstanding balances with the related parties, such as loans, such as receivables, such as payables, that has to be disclosed in the financial statements. Key terms and conditions. What are the key terms and conditions of the transactions between the related party and the entity? If significant terms and conditions differ from those in transactions with unrelated parties, then the financial statement should provide an explanation of such differences. So candidates, here, this means that you need to understand that related parties are firms or individuals or entities that transact business with the organization. So if the terms and conditions differ with transactions with unrelated parties, if the terms and conditions of related parties differ with the terms and conditions of unrelated parties, then the financial statements must provide an explanation of such differences. Number 5, measurement basis. The measurement basis. The financial statements should disclose the measurement basis used for transactions with related parties, such as whether they are measured at fair value or at amounts equivalent to those in arm's length transactions. What is the measurement basis? That is part of the information that is required when disclosing relationship with the related parties in the financial statement. The measurement basis. Key personnel. There ought to be information also in relation to the key personnel, management personnel compensation. Key management personnel. Let me put it accurately. Key management personnel compensation. Key management personnel compensation. The financial statement should disclose the aggregate compensation paid to key management personnel, including salaries, including bonuses, including benefits, and any other forms of compensation. That is a very critical information. The key management personnel compensation. Then we have other related party disclosures. Other related party disclosures. Now, candidates, depending on the specific circumstances of the organization, additional related party disclosures may be required. For example, if the entity has entered into significant related party transactions that are not in the normal course of business, those transactions may be separately disclosed. So this could be any other related party disclosures. Now, candidates, the purpose of disclosing related parties in the financial statements is to provide users with a clear understanding of the entity's relationships with related parties, and also the potential impact of those relationships on its financial position, on its financial performance and cash flows. It also helps users to make informed decisions and assessing the potential risks and benefits associated with the related party transactions. So that will mark the end of our today's lesson, where we've studied 1, risks associated with related parties. We've also studied 2, the controls and procedures that could be put in place to address these risks. 3, we have studied the process of identifying related parties by management. 4, this is 4D. We've looked at the disclosure of related parties by management in the management letter. Then E5, we've studied the disclosure of related parties in the financial management, disclosures of related parties in the financial statements. So before we bring this lesson to an end, I'm going to give you an assignment. This is a question that was tested in May 2021. question 1B. I'll read it. The auditor needs to have sufficient understanding of the entity and its environment to enable identification of the events, transactions, and practices that may result in a risk of material misstatement regarding related parties and transactions with such parties. While the existence of related parties and transactions between such parties are considered ordinary feature of business, the auditor needs to be aware of them. Required, Roman 1, evaluate the reasons why during the course of an audit, the auditor needs to be aware of the existence of related parties. Roman 2, describe the audit procedures that should be carried out to identify the existence of transactions with related parties. That is question 1. Another question leaving you with is the one that was tested in November 2018, question 4C, which reads, discuss 3 reasons why the identification of related parties and materials related party transactions could be difficult for auditors. Discuss 3 reasons why the identification of related parties and related party transactions could be difficult for auditors. That's question number 2. I want you to attempt the 2 questions before attending the next session. And just to remind you, these questions, we have solved them in our block revision segment. So you can check out the answer, compare your answers with what we have provided in the block revision segment. Thank you for choosing to study with us. I will meet you in our next session where we will continue covering the contents of the syllabus. We've done related parties, that is subtopic number 4. In our next session, we are going to study or learn how to draft management letter representation. All right? Thank you. God bless you.